So quickly about myself, I'm based out of Brussels in Belgium. I'm responsible at SAS for the portfolio of risk and fraud products for the insurance sector. And I will give a talk about how to do enterprise decisioning with the technology that we have these days. For the ones that don't know us, a quick overview. We are almost 50 years old, and that is an achievement, I think, in the IT sector where companies come and go. We're still privately owned, but that might change in the medium term. And we are used worldwide. You see a few logos of companies that use us. We are very well known, I would say, for everything which is regulatory. Solvency II in Europe, IFRS 17, IFRS 9, ICS, and these days we are also entering into the actuarial tools. And you will see actuarial decisions, actuarial tools is new things which have been added to our programs like 2-3 years ago and are developing very, very fast. Looking at what people that do market studies say, and these are a few other names than the ones you've seen before. McKinsey, Gartner own our own surveys we run. There is clearly a trend to try to diminish the total cost of ownership of your IT environment, right? Where for a long time there was a tendency to buy the best product for every single niche requirement. There is now more and more a trend to buy platforms which can do multiple things so that you don't have such a high cost, such a high dependency on a very high number of providers. And also, for instance, the second one, the McKinsey one, is quite obvious, I think. We have played a long time with AI. It's time to start productizing it, right? We have tested several things. Now is the moment to productize it. So where do we come from, and why was this not a good idea? We come from, I would say, a silo world, right? Where we had an end-to-end view on the topic we were treating. Was it risk? Was it actuarial? We had our own data marts. We had our own models. We had our own decisions. But when we looked at fraud, we had again a different view. We had different data models. So basically, it also means we have to go back to the back office and ask for another set of data, which might overlap with the data we already asked for risk and actuarial. We had different models. We had different decisions. And the same for marketing. But if you think logically, doesn't it make much more sense to divide the data in such a structure whereby we have common data, whereby we go back to the back office only once and get all of the data that we then can use into our models, because everything which in the end is a decision is based on models. There are more modern models these days than in the past. We have machine. So why to have 50 different, 50, I exaggerate, 5 different models, 5 different insights or decision engines? Why not do it all in the same one? And that is going to be there shown in the market. Leading because you have integrated solutions. So at one point, when you decide to do a marketing campaign, you knew upfront that you don't have to do it to people who are fraudulent, that you don't have to do it to people who you will later on not accept during your underwriting process. All of that is super important. If you just set marketing apart from all the rest, you might basically propose things to people who you will never give it to later on. Or other kinds of mishaps might happen because the left side doesn't know what the right side knows. So going there with an integrated system and a coordinated decision making is the way to go. And why would that be? I said it already, lower cost of ownership, increased productivity, because all of your people will use the same technology. So they will be interswitchable as well. Something we saw in banking very, very early is that people that, for instance, one day were writing programs for the marketing to be optimized could easily switch to rating models, credit rating models, and vice versa. And that is because it was the same kinds of engines that were used. I think insurance should go exactly the same way. Faster time to market, faster time to value. What did we see in the past? Somebody was deciding to make a new model because they found out through backtesting that their performances were lowering. They made the model, and it took them then 3 to 6 months to recode the model through an IT person into the systems. So by the time they could implement a new model, it was probably already outdated. That is not something we should live with any longer. Why give ourselves not a faster way to market, for instance, by letting the end user test a new model and then faster come to the implementation, because you only need these days APIs to interact between models and end users. And finally, and that is the main reason why you need to integrate all of this, you have to start thinking customer-centric. Many insurance companies don't think customer-centric. Motor license, then that is fine, but the day a customer comes and he says, I also have this kind of issue, or I would like to underwrite for that, they don't even know that the customer already has a motor policy. So let's kill all of these silos and get all of the power in the hands of the one that is deciding what is the next best product for your customer. And also in companies which have like branches in life and non-life, why do we keep these walls? There is, of course, there might be regulatory reasons why we keep the walls, but do we keep the walls also for interchange of the data between those two environments? Not necessarily. So I said a lot of decisions need to be taken. Here you have a few examples of what kind of decisions you need to take for private customers, for commercial customers in different stages of the life of an insurance contract, right? You have a number of decisions to take to acquire the business, to underwrite or onboard the customer, to engage him, and to manage him. And very often you see, just make the mental process, compare in your company how many different softwares you use to take all of these decisions. We think it makes sense to do it on one single platform, using engines that can build all of these models and run them in a coordinated way. And an example to say, or to explain that this is not fantasy or dreaming, HDI Seguros, which is obviously of the HDI group in Brazil, they were initially a SAS user for fraud, and only fraud for motor, right? And you see on the left-hand side a few of the improvements they got from switching from the old tools to the SAS tools. But then at one point in time, they came to us and they said, we are busy in more business lines. We don't have only a fraud problem, but we have quite rigid pricing engines. Can you help us? What did they have? They have a social network analysis tool from SAS, so they could link, for instance, fraudsters in networks. And they could determine if a new customer came in, if he was in any way linked to an existing fraud network, for instance, by sharing claims, by sharing addresses, by sharing physical addresses or telephone numbers or license plates. The pricing was done using other tools than SAS, and for the motor and for all the rest they used Excel. So what is the situation we have now with this customer is that they have gone to enterprise decisioning with SAS. So they have now the capability to run fraud and risk and underwriting all from the same platform. They have extended it from motor to all of the branches they have. And now they can start basically having the advantages of all of that. For instance, one of the advantages is clearly that they can be consistent in their decisions, right? If you leave everything to the human, it's not guaranteed that all of your decisions are consistent. One underwriter might be more difficult, so to say, than another underwriter. If you leave it to a model to do it, what you try to do, clearly making a decision between the ones you absolutely want, without any doubt, without any intervention, the ones you absolutely don't want, and then leave an as small as possible to be further investigated item. And those further to investigated can be again then through extra information. For instance, if we think health insurance, for instance, it's extra questionnaires, it's labo results, it's video interviews. You can further reduce it to a yes or no, so that in the end, everything is based upon decisions made by machines that have been trained on data, and that you as an end user basically only intervene in the cases where there is doubt. And you can even be smarter. You can say, okay, if there is doubt, and he scores very high on the doubt, I give that to a senior person to judge. If there is little doubt, I give it to a junior person to decide upon. That's the thing that customers are asking for, basically. Everything which is on there, I'll let you read it, but risk and fraud assessment, I think that is a no-brainer almost, right? I'm not going to run my pricing models if I know upfront that I'm not going to accept this customer, right? So it is logical that I start by finding out, do I want this customer? Is he involved in fraud, yes or no? Does he break my underwriting rules because he's too young, he's too old, he lives in a place where I don't want to do business? So that is logical that I want it. But immediately afterwards, if I decide that he goes through all of these rules, I want to give him a price, right? That is the integration of those different decisions. I want to give him a price, and I want to be very, very clear in why I give him this price. What is the loadings that I apply on him? What is possibly the impact of running by myself, running a campaign? Because I can give discounts, for instance, during a certain period to people that are between 20 and 30, because I think that's a market I need to penetrate. Do I have to do that on the site? No, you integrate it into your underwriting rules. Like I said, embedded pricing decisions, not separately. And investigation management for the ones that I cannot automatically accept or deny. I'll give you here an example of P&C, motor, right? So in the motor case, I can start with the underwriter validating if I can accept this customer. And if I cannot accept him, it goes immediately to the declined ones. I can then find out if, through fraud analysis, and that's not the same people, by the way, but they work on the same system. I can verify if he's involved in anti-money laundering, if he's involved in scams, fraud scams. If I am in the doubt zone, I bring him basically to an investigation interface where I can see why is this person not yes or no. How is he linked to possible fraud cases? It might be just that he's linked through a fraud case because he lives on the same address, or if it's a flat, for instance, I can live on the 4th floor and somebody who did fraud can live on the 1st floor. That's not necessarily a link, right? They share an address, but they don't live clearly together. But if it's a couple, then there is a high chance that it's linked to that same fraud case. If I accept them, then I go to the next stage. I go to the pricing, another decision, another model that will tell me how much he will pay, and I will come out as green. This is exactly the same process that we have used in banks. We all, if we go to a bank, we go to that kind of process. And for us, it's all logical, but in insurance, it's not yet applicable or not yet used. We go exactly to the same process. They make 3 buckets, green, red, and orange, and they try to minimize the orange bucket because that's where they lose time, that's where they have to invest extra money to investigate. All of the rest is automated, goes fast, is cheap. So let's see, in a SAS solution, it looks like that. That's a model, right? You start with data, and then you have a number of use cases. That can be a case, for instance, where I say, I don't want him, and I don't want him, why? Because, for instance, he's too young or too old. I want him, then you go to the right-hand side, because then the model becomes a bit more complicated. It's not just a decision, yes or no, it's a decision also, how much will I charge him? And if he's in the middle, then I go to another tool where I have the possibility to deep dive into why I initially don't want him. And that is working on, like in credit scoring, it's working on a score. There is a high probability or a lower probability that there is something wrong. But it's not a certainty. That is why I investigate him further. And seen again, I have actuaries intervening because they are the ones that build my pricing model. I have underwriters because they decide which customers I take or I don't take. And I have fraud analysts that help me to find out which are the tricky ones that I have to avoid. But in the end, it's all decisions and models. So let's have a look how this could work. You have your user interface. We mimicked one with SAS for auto, where we have, of course, the typical things. I need to identify my customer. I need to know how old he is. I need to know that his vehicle is driving and so on. And I've forced his age to be 17, right? That goes to the system, tries to find out simple rules, and you get as a message, you don't get any proposed premium because I'm sure you don't qualify for an insurance company because you're too young. And that's a simple rule that is executed. As an end user, I can go in that interface and I might say, what would it be if it's not 17 but 19? And I can run that and find out how much of my existing portfolio would be rejected, for instance. But I can do the opposite. If it's an elder person and I set my limit at 60, well, what if I accept people until 62? How would my portfolio look like? And it's nothing to do with pricing. My pricing models can foresee that you give a price from 15 to 85, but I just decide underwriting-wise that I don't take these customers, and I can play with that rule, in fact. Other verification by my fraud analysts, right? This time, it's not the age that's going to play, but still I don't give him or her a premium. Why? Because I have decided, after looking into the rules, that there is a link with an existing fraud network. And for instance, my husband, I'm asking for a policy. My husband has several declined claims. That can be an indication that there's something fishy about me. You've uncovered my husband, but I want to play for him, let's say. And how do we translate that? We're looking at all of these links, and then we give the customer a kind of a score. And if the score is low, then there is no problem. We accept him, her. If the score is high, we decline him. If the score is in the middle, we have different cases that enter into our investigation interface. That is then where the manual intervention happens, where the person that is very aware of these things looks at historical data and says, okay, in this case, there is really no indication except for, like I gave as an example, they live on the same address, but they don't live in the same apartment and they're not married. Or yes, these are a couple married already for 10, 20 years. She has also a declined claim. So yes, it's clearly that this is something I don't want to have in my portfolio. Okay, the third case is where I don't have any doubts on underwriting rules. I don't have any doubts on fraud. And I go in another type of model because now I want to find out how much he needs to pay, right? So I go through that right-hand side of the model. I look at pure premiums. I look at my extras that I put on top of it, acquisition cost, administration cost, profit. I potentially look at discounts I want to give, right? Permanently or temporarily to certain groups of my population. My answer this time is no message, but a proposed premium of 818, for instance. How do I come to that? Because in all of my steps where I set up my coverages, I can find out what my base amount is, and then I will find out what for this particular person all of the add-ons will be, or potentially the reductions. Okay, let's take another example. I have two examples basically. The health insurance, that's another example where in the underwriting I need to be much more sophisticated. It's not like I accept you, I don't accept you. It is much more what kind of disease indications I see. How bad is it? How are you treated? Are you not treated? Those kind of things. Also, that can be translated into scores. Scores which in the first place might make a distinction between I accept you without any further due, or I really need now to go into a much more sophisticated system whereby I go and say, this ones I take, this ones I don't take, and the middle I need to, depending on the case, need extra information before I can decide. It's not that I have necessarily a framework like I had in the fraud, but I need to know more. And I need to know more can be, I send you an extra questionnaire, I ask for a video interview, I send you to a lab, and I ask you to do this and this and this kind of tests on your blood so that I can determine how bad is the disease, how long do you have the disease, is it a family disease, how you treat it okay, is there stagnation, is there deterioration and everything. Once I have these informations, I will add them to my data set, in fact, and I will rerun my algorithm to determine if I can accept you, yes or no. And the orange will change into either a green or a red. How does this work? I have another model, but it's largely, the logic is the same, right? I go through a number of steps with my standard data, and then I determine, is it either green, automatically accepted? Is it either declined? Or do I need to do something more? And as an example here, I'll start from a whole portfolio where that first step basically then is split into multiple sub-steps. And here I run, for instance, a forest model, which is one of the newer techniques that are machine learning techniques we have in our products. Okay, what happens then? We reduce all of the values basically that we found in our questionnaires. We reduce them and we group them together so that you can easily determine yes, no, or maybe. Second step. Okay, if it is automatically accepted, well, then I still have to determine the premium, right? Like I did with the car insurance, the same thing here. We use lookup tables to find out how all of these, how can I say this, the symptoms of a disease turn into a pricing, basically. And we add all of these loadings. The specific things for health insurance is that you cannot necessarily look at all of them separately, but also the fact that you have multiple diseases, for instance, increases the risk. And so there is a special case always for more complex cases where somebody, for instance, has a heart disease in the family, but he typically also has diabetes. That increases the risk, and for those ones, of course, I need a special treatment. If it is not treated, either of the two diseases, for instance, then I will ask, first of all, to have X-ray information. So I will not end up in the automatically accepted, but I will end up in the to be revised. Let's now see what it means in the to be revised. I think there is more examples here. Yeah. So the to be revised. Basically, I'll get the outcome of the score, and I will score all of my demands for policy, put the most at risk at the top, and then it's to my people to take these cases. So if I have only one underwriter, for instance, it will be simple. He has to do all cases, starting from the most dangerous to the lowest. But as I said, if you have multiple underwriters, you can make the system as smart as possible and say, okay, these ones go to you, the other ones go to another one, depending on your experience. Potentially also on the availability of what I would call a dictionary of diseases and symptoms, right? If you have that, it will help you enormously already to determine what is dangerous and what is not dangerous. Okay, so for this person, now that's the list of all of my customers. So if I look at the data, I can decide, no, really this is not so dangerous, I accept it anyway without doing anything. And that is what you see there on the blue. That's the different actions I can take as a user interfacing with the system. I accept him anyway, I don't need anything more. Or I make a case out of this, I'll send him an extra questionnaire. And then I start a case management system, right? You can make that as simple or as complex as you want, but usually it's with somebody taking a step, and then once you get the extra information, there is a revision step of a manager, potentially 2 managers, 3 managers. You can make it, as I said, as complex or as simple as you want yourself. And I can send out an extra questionnaire, or I can ask for a video interview, or I can ask for lab results. I will trigger my scoring again once I have this information. Now, I might make it sound simple. It's not always that simple, because it also happens sometimes that people get a questionnaire in a printed form, and then you get it back in a printed form, and then it needs to be transferred into electronic version before you can continue treating it. But that is usually how it can go. And after I scored him, I can either approve him or reject him. In my system, I keep track of all of these decisions. Why I did it, how I did it, what extra information did I ask for. Because, why? Well, the most simple case is you deny him, 6 months later he comes back and he's asking it again. And suddenly he's much healthier, right? He forgot to mention that he has a heart disease in the family. If you base your decision on only the data you get at that moment, you might accept him. But no, you're not going to accept him because 6 months before he had a heart disease and you captured it and you stored it. So that's that's basically the advantage of having integrated at all levels, the data the models and the results of the reports. You send back some of these data that you created on top of it, you send them back to your basic database, so that the next time he comes, you can grab it there and you can immediately start using it. So it's not just a one way, it goes back and it helps you to make your next decision. Okay? So why do we want the industry to start using enterprise decisioning? There is the performance reason. Time to market increases when you do that. You don't have to go through multiple systems. You don't have the problem that maybe one data using for fraud and another data used for underwriting contradicts each other. Your total cost of ownership goes down. Second reason, your productivity grows because you're only putting your people on the real difficult cases where it matters. You basically use their experience to decide yes or no. You don't need to use people's time to say yes or no, but you do need people's time to say maybe, how do I change a maybe into a yes and no? Clearly, competitive advantage, because the first ones that apply such a thing, they basically have an advantage over all the others in the sector. All the others which are then seen as slow in giving an answer, maybe, or difficult in giving an answer. No, here you're very clear, yes or no, and why. And then finally, trust. Because of the data that you store, because of the governance of everything, you can explain to everybody why you did something. You can explain it internally, you can explain it to the customer, you can explain it to your auditor. I think that is also one of the many companies where I pass, I see this as a problem. They have to basically also almost manually grab information from A, B, C, D before they can explain. Right? Here it's all together. You have a 30-60 degrees view of your customer and his demands, his rejects, his claims, everything. So, conclusion. What we try to do is not to solve one business problem, not even multiple business problems. We try to manage the entire customer life cycle, and we concentrate on the customer and not on the product.